Afternoon, October the 15th, 2015. Quarterly estimated tax payment day. I always feel pretty good until the quarterlies roll around, and then back to the salt mine, so to speak. These guys have their hands out everywhere you turn around. Win, lose, draw, they get paid. And that's the way the market will always, the tax deal is set up. Okay, we want to buy 85s to 90s. Want to sell 2000, 2005s. Very, very choppy market, very little range. 2000 worked as resistance, 90 worked as support. Very, very difficult trading in between. We talked about how if the market didn't break, it would most likely trade higher. The longer the market doesn't sell, the more likely it is to trade higher. And that's exactly what happened. We've taken out the most recent high. Right now, we're taking it out. So 2025, then 2032, 2037, then 2040, 2045 is where the next stop is. And I think the most important break in the market is going to be this 2040 area. And I think the market is pointed towards that when it's all said and done. And you can just see right up here this break in the market, 2037, maybe 2047 right up here. So let's make it 2043 plus or minus. So here's where we're at. This AB double edge right there is 25. So higher low, higher high. F1 says buy it. Okay, what do we have tomorrow? More than likely we're going to have bad news. Industrial production is called off 0.3%. 70% of our economy is driven by the retail account, and their spending is down. The economy is supported by subprime automobile loans right now. The housing sector has started to slow down. So we have pretty good news tomorrow. Industrial production can come in lower than forecast. So yay, it comes in lower than forecast. Buy stocks. Capacity utilization 77.4. Comes in lower than that. Yay, buy stocks. And it doesn't make a hell of a lot of difference to us because we just see which way the money's flowing and we join them. Jolts, that number will probably come in higher than forecast. And it's 5.753. The economy is desperately seeking people to fill job spots. Doubt it. Consumer sentiment. 89.5, that number could come in lower, although it is a surrogate for the stock market. And then Atlanta Fed inflation. At plus 1.7. That's hard to believe given the recent PPI numbers. So here we are. Close right now, failure to take out the 20 area, sell failure to take out 20 plus or minus. We know chart structure wise, we get this low volume number. This 23 area, 24, so 23, 27 would be sell number 2, basically leaning against 25. The breakout came at what, 15? So closing right here, we'd like to buy 5s to 10s. Might take a 15 to get in. I don't know where it's going to close. Last rotate down was 12, so maybe 13s are better. And then the buck to 05. Excuse me, 95 to the buck for buy 2. And again, like I said, this market economy stinks here and around the rest of the world. Buy stocks. That's what we're seeing. And everything that we've grown up with, everything that we've followed our whole lives has been turned upside down by government administrative policies. It's just, fortunately, we know how to trade the short side of the market, but you don't think anybody out there is not sweating their job? What's coming around the corner next? There's a lot of angst going on, and I think one of the reasons that our numbers have held up so well for where they are is that everybody recognizes the potential. If you're to change current industrial policy, if you're to change current tax policy, our economy could explode. There's that much pent-up demand. It's kind of like after World War II. People been away in the war, not been a part of the economy. They come back, and all of a sudden the jobs start to appear and start to grow, and we start to bring production back onshore from offshore. There's a lot of pent-up demand out there, so it could actually happen. Okay, looking at the financials, we talked about having to take out yesterday's highs. We couldn't. If we didn't do that, we would come back down, and you can see that the breakout in the 129 area right here is being tested. So inside day, that suggests trading range. We've got a lot of news tomorrow that can change things. We'll see how she goes. And for those of you that are visiting the room, all the volume is in the 10-year. It's not really in the 30-year. But we base our methodology, it was developed for the 10-year. Once you get it down in the 10-year, you take it to the 30-year and prosper. So here we are with B. I think the first trade is a sell, assuming the E-mini continues to rally. So the 5 area right here, 4.5 was the last rotate up. We're going to make 5 to 9 sell 1. And then we're going to make 11 to 15 sell 2. That's where we were this morning. The high was 15.5. Our sell was 15 to 19. On the buy side, we're going to open up a little bit to the downside. We'll make it 29, 25, but 01 might hold. It just depends on what happens to the E-mini this afternoon. The E-mini rejects, there's profit taking into the close. We'll have to pay up to get into the bonds, and then 17 to 21. News focus tomorrow will be industrial production, followed by consumer sentiment and the E-mini's reaction to such. Okay, the bonds and the notes rally for the right reason, because the economic news isn't very good. And off the fact that the Fed can't really raise interest rates, given what's going on right now. So the nice thing about playing treasuries and gold and the euro is that they follow fundamentals pretty well. Crude and the Emini don't necessarily follow fundamentals on a micro basis when the news hits. Longer term they do, but right now the Fed's going to buy everything that's thrown at them and support the market, and the stock market's not going to go down by much. Hold the trading range. Okay, looking at this contract, the last rotate up stopped at 28. We're at 22, so we'd like to sell 27. It's got a little more volatility. 31, sell 1. And then 7 to 11, sell 2. We open it up because of the volatility in this contract. That C period low is 13. The breakout came from 14. So 13 to 17, buy 1, a little lower in the overnight. And then we'll go 1 to 5 for buy 2. But if you're having problems making a bottom line, you remove that. Yes, you're going to trade is good news bad news, or is bad news good news? And you'll get a follow through off of good news and bad news in this contract that you don't necessarily get, especially in the E-mini. Now, as you get deeper in the day, what the E-mini does weighs on the market weighs on the market more and more. So it's not always clear sailing, or selling, as the case might be. Inside the higher low, higher high. We knew that we had going to have a pretty good chance to get to 87 a couple of days ago. We did. We've gotten higher. We've gotten over 90. That means stops above 1200. I think that's where the play is. So we're going to have near resistance, which will be the first sell, and it's going to be in our 90-92 area. Then I'm going to raise it to 99-1201. we take out today's highs, I mean, why not go get stops above 1200? You hear the exchange members slobbering into their coffee cups. The amount of stops are going to trigger and kick off when they get up there. We're at 85. Last rotate stop down at 82, so we'll make 80, 82 by 1. And then back to our 75, 77 that we liked this morning. Got a little deeper, but it was a good buy for us and produced a hell of a trade. And we're definitely dealing with P's right here. This market is pointed higher. Okay, crude finished up pretty close to unchanged today. Not quite. And the high volume number pulled us down. We've got these low volume numbers at 47, so we've got a 45.50. So if the low is like 45.50, $3 takes us up to 48.50. That's where the selling started. That's within the realm of possibilities, but this screen says find a place to sell it. And we've got this late move out of the middle right here, so 47 higher in London, get stops above 47, sell 1, then 47.50, 75, sell 2. I'm going to pick up this high volume number right over here. And on the buy side, the breakout came from 40. So we're going to make 46.25, 46 even by 1. And then 45.50, 45.75 by 2. I think we're going to get stops below 45. But obviously that did not happen today. And looking at the euro, euro found sellers at 115 even. It is trying to trade up, no doubt. So we got a higher high, and we got an outside day, and that also favors the trading range. And looking at the F2 screen, volume pulled us down to it. Do we have enough selling to get through the 1350 area, picking up, getting stops beneath that low? I think we're close enough to it to give it a shot, so we'll make buy 1 1350 plus or minus. Worth a shot. Then 1315, 1325 by 2. Okay, last rotate up stopped at 14, so 14 plus or minus is going to be sell 1, and 14.25 to 35. Picking up this area in here will be sell 2. And like I said, we have news tomorrow. Industrial production is a market mover. Jolts, no one pays much attention to. Consumer sentiment will cause a reaction, but it usually does not move markets unless it's the only piece of news. So the news focus is going to be industrial production. I'll see you all bright and early in the morning. You all have a great evening. It was fun today. Most of the stuff went our way with our early calls. I always like that when that happens. Get kind of used to it happening, but some mornings it doesn't. Just got to pick up the pieces and get back to it. Y'all have a great evening. It's supposed to be daytime highs tomorrow in the mid-60s. We're going to go from 85 to the mid-60s. A 20-degree TD. Reg must be sharing some of that Canadian air with us. See y'all in the morning.